Imagine you're walking through the bustling streets of a modern city like Dubai or London, where skyscrapers tower over ancient markets. Amid the chaos, a quiet transaction unfolds in a small shop tucked away in a side alley. A worker from Pakistan hands over a wad of cash to a trusted elder behind the counter. No receipts, no banks involved. Just a few words exchanged, a phone call made, and within hours, that money appears in the hands of his family back home, thousands of miles away. This isn't some spy thriller, it's the everyday magic of Hawala, an ancient system that's been moving money across borders for centuries, outsmarting empires, wars, and even today's high-tech financial watchdogs. Let's rewind the clock to understand where this all began. Hawala's roots stretch back to ancient India, long before the first European banks dreamed of ledgers and interest rates. Historians trace it to the 8th century or even earlier, during the Silk Road era when traders needed a way to settle debts without lugging heavy coins across deserts and mountains. The word Hawala itself comes from Arabic, meaning transfer or bill of exchange, but in Hebrew, it can mean parcel. It was born out of necessity in a world where formal banking didn't exist, and trust was the only currency that mattered. Merchants in bustling ports like Mumbai or Karachi would rely on networks of family and clan ties to ensure payments reached their destinations. Over time, as Islam spread through trade routes, Hawala evolved into a sophisticated system, aligning with Islamic principles that frowned on interest-based lending. By the Middle Ages, it had spread to the Middle East, Africa, and parts of Asia, becoming a lifeline for pilgrims, traders, and wanderers. Fast forward to today, and Hawala is still thriving, especially among immigrant communities. Picture Ahmed, a construction worker from Somalia living in Minneapolis, Minnesota. He's been sending money home to his aging parents for years. Banks? Too slow, too expensive with their fees and exchange rates, and sometimes they just don't reach the remote villages where his family lives. So, Ahmed turns to Hawala. He visits a local Hawaladar, a broker who's respected in the Somali community, maybe running a grocery store or a money transfer shop as a front. Ahmed hands over $500, earned from long hours on a building site. The Hawaladar notes down the details, the amount, the recipient's name, and a secret code, perhaps the serial number from one of the bills or a simple phrase like Blue Eagle. The Hawaladar doesn't pocket the money and run. Instead, he picks up his phone and calls his counterpart in Mogadishu, Somalia. No money crosses borders physically. The message is brief: pay out $500 to Fatima in Village X, code Blue Eagle. Back in Somalia, Fatima walks into a similar shop, recites the code, and walks out with the cash. Simple, right? But here's the genius: the two Hawaladars settle up later through a web of mutual debts. Maybe the Somali Hawaladar owes money to someone in Minneapolis for a previous transfer, or they balance it out with goods, services, or even other currencies. It's all based on honor and reputation. If a Hawaladar cheats, word spreads like wildfire in the tight-knit community, and they're out of business forever. This system isn't unique to one culture. In China, it's called fei qian, meaning flying money, a nod to how funds seem to soar across oceans without wings. On the Philippines, it's padala, often used by overseas Filipino workers to support families back home. In Pakistan, they call it hundi, and in Thailand, phi kwan. Each version adapts to local customs, but the core is the same: trust over paperwork. Worldwide, experts estimate there are about 5,000 Hawala brokers operating, handling billions of dollars annually. Some say up to $500 billion a year globally, though it's hard to pin down because it's all off the books. Why does it work so well? For starters, it's fast, often same-day delivery, beating banks that might take a week. It's cheap, with fees as low as 1 to 2% compared to Western Union's 5 to 10%. And it's accessible: no need for ID, bank accounts, or literacy in complex forms. In war-torn places like Afghanistan or Yemen, where banks have collapsed, Hawala is sometimes the only game in town. During the COVID-19 pandemic, when formal remittances dipped, Hawala networks surged, keeping economies afloat in developing countries. But like any shadow system, Hawala has a dark side. Its anonymity makes it a magnet for criminals, from drug traffickers to terrorists. Governments struggle to track it because there's no paper trail, no wire transfers, no SWIFT numbers, just whispers and code phrases. This vulnerability has led to some infamous scandals. Take the tragic events of September 11, 2001. Investigations revealed that some of the hijackers received funds through Hawala networks. For instance, money from al-Qaeda operatives in the Middle East was funneled to the plotters in the US, via brokers in Dubai and Pakistan. It wasn't the system's fault per se, but its opacity allowed bad actors to slip through. In the aftermath, the US and other countries ramped up regulations, requiring Hawaladars to register and report suspicious activities, but enforcement is spotty, especially in regions where Hawala is culturally ingrained. Another chilling example comes from India in the 1990s. The 1993 Mumbai bombings, which killed over 250 people, were partly financed through Hawala. Underworld figures like Dawood Ibrahim used the system to launder money from drug smuggling and route it to terrorist groups. Funds moved seamlessly from the Gulf to India without a trace, highlighting how Hawala can blur the lines between legitimate remittances and illicit finance. Or consider Afghanistan during the Taliban era. Opium traffickers used Hawala to wash billions from the heroin trade, with brokers in Peshawar, Pakistan, settling accounts that funded insurgencies. Now, let's zoom in on a more recent case that's been making headlines, the Somali fraud scandal in Minnesota. Minnesota hosts one of the largest Somali American communities in the U.S., with tens of thousands fleeing civil war back home. Many are hard-working folks, but a massive welfare fraud scheme uncovered in 2025 has shaken things up. Federal investigators revealed that over $250 million in government funds, meant for child care and food programs, were siphoned off through fake invoices and shell companies. Much of this money, allegedly perpetrated by some in the Somali community, was funneled overseas via Hawala. Here's how it played out. Scammers set up bogus daycares and feeding programs, claiming to serve thousands of kids who didn't exist. They pocketed the reimbursements from state and federal programs, then used Hawala brokers in Minneapolis to send the cash to Somalia. But it gets darker. Some of those funds reportedly ended up with Al-Shabaab, the al-Qaeda-linked terrorist group that's been wreaking havoc in East Africa. Al-Shabaab, known for brutal attacks like the 2013 Westgate Mall siege in Kenya that killed 67 people, relies on extortion, smuggling, and donations to fund its operations. In Minnesota, whistleblowers and FBI probes found that Hawala transfers, innocent-looking remittances, were sometimes diverted to the group's coffers. One specific instance involved a network of over 70 defendants, charged in what prosecutors called Feeding Our Future, a nonprofit that ballooned from humble beginnings, to handling $200 million in aid. Money flowed out through Hawala channels, with brokers using codes and trusted intermediaries to avoid detection. A report from November 2025 by the U.S. Department of Justice warned that this wasn't isolated. Similar schemes could be funding terrorism worldwide. Somali leaders in Minnesota have pushed back, saying most community members use Hawala legitimately, and that the fraud taints an entire group. But the case underscores a harsh reality: when trust is exploited, Hawala can become a pipeline for terror. This isn't just a Somali issue. Hawala's been linked to money laundering in Europe too. In the UK, investigations in the 2010s uncovered how Pakistani Hawaladars laundered proceeds from VAT tax fraud, sending millions back to Asia. Or in the Horn of Africa, where Ethiopian and Eritrean migrants use it to evade capital controls, but smugglers piggyback on the system for human trafficking payments. So, is there a way to fix this? Regulating Hawala is like herding cats. The Financial Action Task Force, FATF, a global watchdog, recommends licensing Hawaladars and monitoring for red flags, like unusually large transfers, or links to high-risk countries. Some places, like the UAE, have integrated Hawala into formal systems with digital tracking. But overregulation risks driving it deeper underground, hurting the poor who depend on it. In fact, during humanitarian crises, like the 2011 Somali famine, Hawala delivered aid faster than NGOs. As our story winds down, think of Hawala as a double-edged sword, forged in the fires of history. It's a testament to human ingenuity, moving fortunes on a handshake in a world obsessed with apps and algorithms. Yet, it reminds us that trust, while powerful, can be fragile. Next time you send money via an app, spare a thought for the ancient network still humming in the background, carrying dreams, dollars, and sometimes dangers across the globe. In the end, Hawala isn't just about money, it's about connections that bind us, for better or worse.